Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is Tuesday, February the 4th. We're going to take a look at Atkore. This is one we have reviewed before, but big drop on the day. So we're going to take a look at it again to see what's going on here. Run it through the screener. This is out of the industrial sector. Now, before we get too far in the video, if you could do me a big favor, it doesn't cost you but a couple seconds of your time, and it really does help me out. Hit that thumbs up button down below. If you find any value in the content, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday when the market's open. We take a look at a company that's pulled back on the day, run it through the screener, see if it makes it onto my watch list. I also do a portfolio update video where I cover what I have bought for the week on Sundays. So again, one more reason to hit that notification bell, and there is a thanks button down below for anyone who might want to buy me a cup of tea. Really appreciate everyone who can do that, and a special thank you to the subscribers and the viewers of the channel. You guys are awesome. The channel continues to grow because of people like you. Share the videos with anyone that you think might find value in the content as well. That is one way to help out the channel also. Now, this is the Vested Interest Stock Screener, so this is what we will be running through in the video. We'll run it through the screener, see where it stacks up at the end. I do add in price to book for financial companies using one as fair value. Do not just blindly use one as fair value for price to book if you're using it for companies outside the financial sector like banks and insurance companies. So let's say something in the tech sector, for example, you can use price to book, but I'd compare whatever company you're looking at to similar companies that produce the same type of product. Same thing for industrials. You could definitely use it for those as well. You can also use price to book to compare the company to itself to see what the price to book is over time, a year, 2 years, 3 years, and if it's higher or lower than their average. So there's a couple different ways to use price to book, but like I said, just don't blindly use one as fair value. I use that for just financial companies like banks and insurance companies only. That's why it's highlighted in green. Now back to Atkore. Check them out on their homepage where I pulled this information from, www.atkore.com. That's www.atkore.com. That is their homepage. Atkore is a global manufacturer with facilities located around the world, recognized as a leader in electrical, safety, and infrastructure solutions. Our products are used to power and protect the world, including electrical conduit and fittings, cable and cable management systems, infrastructure products, and safety and security products. Distributors and contractors globally recognize Atkore as an industry leader and preferred supplier. We have a vast portfolio of products that will meet your construction and renovation needs. Because selecting the right products is sometimes a challenge, we are here to advise you. We also know about how pressing deadlines can be. Through our large network of regional service centers, we deliver orders on time. With a century of expertise, look to Atkore for the following markets. So you can see here their market: non-residential, commercial and industrial as well, electric power, electric utility, data centers and telecom, same down here, water, transportation, solar. You've got those all there at the bottom as well. So these are a lot of the markets that they're in. Non-residential, the only one that really wasn't listed down below under commercial and industrial, right? So that's non-residential is commercial and industrial. It does not look like they are providing stuff for like your home, right? That would be residential. Now, the reason we're taking a look at them, down 19.54% on the day, huge drop on the day. We are talking about Atkore, ticker ATKR. Again, they are out of the industrial sector. 52-week range currently as low as $62.70, so they are pretty close to their 52-week low, as high as $194.98. Again, much closer to their 52-week low after the drop today. Market cap of 2.227 billion, so a small cap company here. A beta of 2.13, so much more volatile than the overall market, over twice as volatile. One being the volatility of the market, so 2.13 would make them over twice as volatile as the market itself. Price to earnings PE ratio very low right now, $5.05 per share. EPS is much higher than their current price to earnings at $12.69 per share. Earnings date was today, so I'm assuming something coming out of the earnings was not good for this company, and it could have been potentially that their earnings were decent and their future projections were lowered, but you'd have to tune into their earnings report and see if they had an earnings call, see what all was said about that. Again, could be bad news for what's forecasted out in the future, or they just could have hit some bad numbers or not hit their numbers at all. Forward dividend is $1.28. They are quarterly payers to divide by 4, though we will see their payments per quarter here towards the end of the video. Their dividend yield is currently 1.52%. Ex-dividend date was December 6th, so we're well past that. Unless you owned them on December 5th or before, you would not get the next dividend, which pays out on February 28th. If you were to buy them now, you're not going to get that dividend. You'll have to wait a few months for the next payout. 1-year target estimate, at least according to Yahoo Finance, $100.86. So even looks like they maybe have downgraded this one as far as future projections, because $100.86 is not even close to $194.98, which is what they hit over the last year. So they do not see it getting even close to their 52-week low, at least according to Yahoo Finance. I'm not affiliated with Yahoo Finance, just one of the sources I go to for information. All right, jumping over to the right, I typically like to look at dividend yield theory, but we can't really do that. Typically what we do is we look at their 5-year dividend yield average. They don't have 5 years of dividends. You'll see that here in a little bit when we look at their dividend history, but I can't really do that to compare their 5-year average to their current 1.52%. So not going to be able to do that one on that one. Their payout ratio is extremely low, though, at 4.49%. So this gives them a lot of runway to increase that dividend, make acquisitions, pay down debt. They're definitely not in jeopardy of cutting the dividend here unless they pause it for any other reasons, but it won't be because their payout ratio is too high. I like under 75%, so this is very low. Now, I want a company to have growing free cash flows. Typically, if a company has growing free cash flow over time, they have growing dividends as well. They can pay down debt, they can make acquisitions, they can repurchase shares, and they can pay a dividend and raise that dividend. That's all the things companies do with their free cash flow. Now, going back here to September 2021, you can see $508 million in free cash flow. 2022 was a jump up to $651 million. Looks like a slight downturn in 2023, back to $588 million, and a further downturn in September 2024, down to $399 million. So actually, if you're looking at from 2022 down to 2024 last year, they have seen decreasing free cash flow. This is a cyclical company. It's going to be matching the cycles of construction, right? Especially industrial and commercial construction. Again, not being a residential provider, they won't be impacted by home building slowing down or speeding up, but they will be impacted by overall infrastructure projects, new buildings, whether they're office buildings or condos, stuff like that. As solar projects, water projects, that sort of thing. As they're cycled, this company will be impacted. But it definitely looks like a 3-year downtrend. They are repurchasing they are repurchasing shares as well. You can see here September 2021, 135 million in repurchase shares. 2022, big jump up. Not only the free cash flow jumped up, but they used some free cash flow to repurchase shares, 524 million. Even with the decrease in 2023, they still repurchased 505 million shares, and still in 2024, 398 million. So they are seeing decrease in free cash flow, but they are still pulling shares out of the market. Now, jumping over to stockanalysis.com, this is another source I like to go to for information. I am not affiliated with stockanalysis.com either, just one of the 2 or 3 sources I like to go to, and I do recommend more than one source so you can make sure the information you are getting is accurate. As you can see here, this information was last updated December 17th. We're obviously almost 2 months past that, so that is part of the reason why. You want to make sure that you are looking at more than one source. Sometimes the information is not updated on a regular basis. Sometimes it's just incorrect. It happens. I do have 6 analysts that have taken a look at this. They do call it a consensus buy, a low estimate of $84, currently much lower than their lowest estimate, and that would represent a 30.96% increase if it came back up to their lowest estimate. Average estimate of $115.67. That would represent an 80.34% increase, and if it happened to hit their high of $188, which would be closer to their 52-week high, but still not quite there, that would represent a 193.11% increase. All the while, you could collect that 1.5% plus dividend. Now, statistics I like to jump into and look at return on equity and return on invested capital. I like 10% or better for both of these metrics. A return on equity sitting at 25.31%. Nice. Beats the 10% I'm looking for there. Return on invested capital at 13.26. Also beats the 10%, so that would get a check. Now, EPS growth was not listed. I like 5% or better forecasted over the next 5 years. Revenue growth was not listed either. Leads me to believe it's probably in the negative. All right, let's look at their dividend history here. Quarterly payer, as we said, payout ratio, they're saying 12.31%. Yahoo Finance had them at 4%. So either way, still very low, 10%, 9%, 12%. Anything down there is low, under 75% that I look for. But again, part of the reason why I recommend more than one source. Sometimes these numbers don't jive. So since they don't jive, you might want to look at a third source to see what the truth is. Maybe it lies somewhere in the middle. Dividend growth not applicable. So no dividend growth currently. They say 1 year of growth, but I'm going to say I don't agree with that because I looked at the numbers. Buyback yield is positive at 6.99%. That means when they are buying back shares, they're doing it at opportune times. And shareholder yield is positive at 9.01%. They do pay out on the March, May, August, December timeframe, though it looks like they paid out on February, so maybe they pay out on a sporadic time frame. Looks like it's kind of in line with the March, May, August, December time frame. But like I said, they've got a February payment here too on the 28th. So maybe they're a little sporadic between February and March payment. We'll have to wait and see. They don't have a lot of history to go off of. But as you can see here, going back to February 26, 2024, that's when they started paying a dividend. So just last year, 32 cents. And they have kept that through February of this year. So if they are going to have dividend growth, we should see it sometime in 2025. But they did not have any dividend growth last year, and their last payment, they didn't grow it either. So we'll have to wait and see what's going on with the dividend growth on this one. But for right now, it's just 32 cents, and that's where they've held it. All right, let's run it through the screener. Understand the business. Check there. That's where we started, right there. Electrical provider or electrical equipment and material provider there. Growing free cash flow. Now, we've had several years of downturn, right? The cyclical company, maybe they're seeing a downturn overall. This could be the bottom. Maybe they start rolling back up. We'll have to wait and see. Growing dividend, not yet. If you're into this one, I'm sure you're hoping that they do start growing the dividend, but as of right now, they have not. Only want a little over a year of payments. Dividend payout ratio is under 75%, even at 12% or 4%, whichever one is correct, it's under 75%. Check valuation based on dividend yield theory. Can't do that. We don't have 5 years of data. Buy below current cost basis. It is within 15% of a 52-week low, so check there. Return on invested capital, return on equity, both over 10%, so check there. Earnings per share growth was not applicable. They didn't have anything listed. So we're only looking at 4 of the 8 needed to make it onto my watch list. Not quite there yet. It is one. I wish they would have put earnings per share growth, even if it was negative. And we'll just have to wait on this one to see what happens. Maybe they start growing the dividend. Maybe they turn it around and growing free cash flow starts to go forward. But Atkore is an interesting company. It is one that I've looked at before. I'd like to hear if anyone has this one in their portfolio in the comment section down below. Are you concerned? Huge drop on the day. Like I said, not quite back to their 52-week low, but very close. And a 19% drop. If you were holding this one, I'm sure your jaw is hit the floor on that. That's a pretty big drop. All right, well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Atkore. Is it in your portfolio? Is it one you are watching? Maybe it's one you're buying now that it had a big drop, or maybe you're part of the reason it dropped and you were selling. Love to hear from you in the comment section down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you do have a company stock you'd like me to take a look at in a stock pick of the day series, go ahead and drop it in the comment section down below. I'll try to work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select the criteria, or seek the advice and counsel of a certified financial advisor.